Welcome to RISKSA TV. We're at the first day of the PSG annual conference at Sun City. I'm joined now by Francois Gouws, CEO of PSG Konsult. Francois has just shared with us insights into the developments in the company over the year and an outlook for going ahead. Francois, you spoke about the fact that the results remain for PSG above market expectations and that investors remain pleased and impressed. Take us through some of the highlights across the three divisions.
Yes, we're very pleased with our year-end results, which we published in early April. Our overall headline earnings per share was up 30-odd%. And there was a real strong showing in the wealth business, which also grew very rapidly at above 30%. And then, of course, our asset management business. We had a slightly weaker result in the insurance business. But then again, the insurance markets have been pretty difficult, so single-digit increases in percentages there. But overall, I'm very pleased about a comprehensive performance across all of our various businesses, and that's the kind of growth rate which the firm has been growing at for quite a long time, at least the last 10 years.
PSG Konsult listed last year on the JSE. How has that impacted the business?
I think it's given us more exposure, certainly in the financial press. Journalists are interested in how the company is doing. Self-evidently, we trade on it at a daily basis, and as we trade, I think not only is our own company being monitored, but also our company in relation to the other financial services companies. So I think that's given us good exposure, and we're actually very pleased with that.
You spoke of the current run in the market and the fact that that's been getting on for around 7 years, and that historically, if we look back at trends, there is kind of a cycle of boom and bust around that 7-year point with a dip kind of likely or some kind of crash. And you spoke about the fact that PSG, you feel, is well positioned to weather such storms. What gives you that confidence?
Well, the market has implications for our firm because underlying our earnings is assets effectively and revenues generated on those assets. So if the markets do well, then of course that has a beneficial effect for the firm. The reason why I was talking about the level of markets and the increases over the last number of years is because more or less from 2008 the market has more than doubled, and the question is obviously, can that continue and for how long? And I was simply making the point that every 5 to 7 years, if you go back over history, then there's some kind of a correction. And what we need to do is make sure that if that correction occurs, and of course it's very difficult to predict that when that correction will occur, that we are in a good position and that we're financially sound. So some of the actions that we've done within the company is to repay all of our debt. Some of the actions that we've done in the company is to do away with all areas where we might suffer operational risk. We've announced that we've stopped doing white labeling, for example, on an administrative basis. So these are examples where we're trying to prepare the company for a possible downturn in the market. But of course, day by day, our intention is to grow. And so we continue to service our clients, we continue to monitor all the various investments, and we continue to manage all the various risks in the firm.
You spoke also about the incoming changes around RDR and the impact that will have on the sector, and the way that the regulator will use that as an opportunity to level the playing fields for providers and advisors, etc. And you spoke of the fact that the PSG is well prepared for this change. What have you done to prepare?
I think there's a key difference between us and other financial services providers. We're a advice-led firm rather than a product-led firm. And as a consequence of being advice-led, inculcated in our culture is various core beliefs. We don't believe in friction costs, we don't believe in bundling. There's a whole range of core philosophies that we have, transparent pricing and so on. And so all of those core beliefs, I think, translates into looking after our clients and providing value for those clients and making sure that our clients are put in the best possible position. And our take on what the regulator is trying to do with RDR is to ensure via sets of rules and regulation that customers get better financial outcomes. And the way in which they're trying to attack that is through a level playing field across all the various financial services providers in relation to platforms, in relation to product, and in relation to advice. And the point I'm just trying to make is that our core view, our core philosophy has always been to act and behave in a way which is consistent with level playing fields across the three areas that the regulator plans to attack. And therefore, I don't think it's a big leap for us to adjust, and in many ways, I think we're already there. So we look forward to the RDR regulation and legislation, and we feel indeed it will generate better outcomes for clients, and we feel that we're in good position to serve those clients, with any of the changes that regulation might bring.
Fantastic. Thank you so much for joining us.
It's a great